All right, guys, we've got about 4 minutes left, and then we'll start. 4 minutes and counting. All right, let's begin. Good morning, Checkmate crew. It is 30 minutes after the opening bell of the New York Stock Exchange at 10 a.m. Eastern Time on this Tuesday. Today is December 27th, 2022. Mickey Blindside here with your market memo. Hope everyone's doing well. Hope everyone had a wonderful Christmas. We had a 3-day weekend. Yesterday the markets were closed, and now we are reopening. The markets are open now from the Christmas holiday. So let's take a look. This is the last week of the year. So I think what's important to look at right now is the end of year options chain. Now, I already took some pictures of the options chain right before the markets actually opened. So one of the things I wanted to talk about was some of this open interest that we see not only on the put side, but also on the call side. And I think it's the call side for this week that's going to matter a lot. Of course, we're going to see, of course, the retail traders and some of the commercial hedgers coming in, of course, with the put volume for this week, as they have for mostly this year. A lot of the hedging has happened in shorter dated puts. However, there is a significant amount, actually around the 400 to 405 zone on the SPY, on SPY. There's significant open interest that was opened as covered call writing. So covered call writing is when you have shares or when you have equity positions and you sell calls against that position. All right. And so I think a lot of these calls in the 400 to 405 zone are covered calls. Is probably written. I know a lot of them were written around June, but I think as the markets went up to that zone, that institutional dumping zone that I told you guys about, that 4100, 4050 to 4100, that zone, I didn't come up with that zone out of nowhere. A lot of that zone was also where we saw hedging demand come back. We also saw a lot of covered call writing happening in that zone. All right. Now, if the S&P 500, I think, goes up to that zone, all right, and that zone, it's, that, let's say 400 to 405 zone, I think there's a very good chance. And if it happens before Thursday, I think there's a very good chance that we might see those traders or investors that are short those calls, they may have to roll those calls to either June or December of 2023. And if they roll those calls, we might see like a quick, downward movement in the market once the market hits that 405, let's say 400 to 405 zone. If you look at, I just showed you guys the options chain on the S&P 500. Again, this was moments before the markets opened. We see that significant OI there. Also, if we look at the SPX options chain, same thing. That one we see here for 4,000. All right. Again, we have lots of that was a lot of calls that were sold. Same thing with the S&P 500 futures. If you look at the futures market too, also again we have significant OI, open interest along that 4,000 to 4050 zone, all the way really up to 4,100. Okay, so all these calls may have to get rolled if we get pressured, if the price pressures those covered call writers. And again, in order for that to happen before the end of day Thursday, we're going to have to go up to that zone, that 400 to 405 zone in the SPY. So that, right now we're down $2.60 on SPY. If we get a turnaround Tuesday where we go up, I don't know, $9-10, and then on Wednesday we continue that move into the 400s, that would, I think, be a pretty high conviction short. Then the options market would be on your side there. So even if our liquidity conditions were improving, I think the options market, the mechanism behind that, would probably create a little bit of a downdraft, at least for a couple of days. I'd be willing to go, buy some put spreads, perhaps ones that expire in the end of January, something that's 30 days or less. I may be willing to do something like that if it gets to that point, just for this week. And again, after end of day Thursday, that effect will be much weaker. By Friday, usually the OPEX, the options expiration unwind, or the reaction to options expiration usually doesn't carry over into Friday, because the S&P 500, the main SPX options chain, it's an AM settlement, so it stops trading at the end of day Thursday. So usually the big money, as they hedge and position themselves for OpX, usually that movement is done by end of day Thursday. So I really want to see that by end of day Thursday, and if that's the case, I won't really consider the liquidity conditions at that point. However, if the markets go up to that 405 zone after this week, then of course I will be looking at the liquidity conditions and just making sure that our liquidity signals, like our junk bonds advanced decline line, our New York Stock Exchange high-low line, I want that all curving down as the markets go up and touches that 405 zone. If not, then I just, if the liquidity conditions are improving by next week and it gets to 405, I may have to be a little bit more patient in entering my shorts. Okay, we might want to see either some sort of exhaustion signal, or we're going to want to see those liquidity conditions start curving down before shorting the market. But again, for this week, before Thursday end of day, if it just gets there, it doesn't matter what the liquidity conditions are. The options positioning and the mechanism behind the options expiration, I think, is going to cause a quick downdraft as those call writers have to roll those calls into June or December. So that's my plan. So it's really the same plan as of last week when I formulated my S&P 500 plan. But this now I'm just adding another kind of layer to it just for this week's end of year options expiration. Okay, so I just thought I would share that. Today, the S&P 500 again is down 0.68, but the VIX is up. We shall see where the VIX ends up. Some of you guys, I know via DM, I've been talking really bad about UVXY, and UVXY generally is something that I like to short. I usually like to buy puts on it when the VVIX, the VIX of the VIX is under 115 or so. Some of you guys were celebrating when volatility popped last week and said, oh, see, UVXY is a great hedge. Well, not really. I mean, you guys, let's assume you bought it at the bottom at 674, which you probably didn't. Nobody gets the exact bottom, but you were able to get 674 to what, 780, $1.40. That's what, 20%. Whereas if you had bought S&P 500 puts, even if you bought a debit put spread, that movement last week probably would have netted you at least 70 to 80% or more. So again, if you're really hedging the market, I think puts on the S&P 500 or SPY is a way better hedge than UVXY. UVXY, uses the VIX futures, and because of the contango that's in there, there is a lot of decay. So contango is when the later month, the second month, is higher than the front month, and so there's always this continuous futures roll in it. Let me just show you this VX. So continuously within UVXY, the people that manage UVXY's portfolio, they continuously every day have to get out of their front month contract and buy some of the later month contract. Well, if there's contango and the later month contract is more expensive, they're rolling into a more expensive contract, and therefore they can buy less number of contracts as they roll. So that creates a decay in the actual ETF itself. Okay, so even though it does jump up, you're still eating some decay because of that contango roll. So again, if you are trying to hedge against the downfall in the market, SPY or SPX options spreads or just straight just flat out puts is probably going to be your better bet. So then no matter what you do, there's always going to be some sort of timing risk, and it's very, very expensive to be wrong on UVXY longs. Okay, if you're long UVXY, it's a very expensive mistake. Okay, that decay continuously eats at you. All right, whereas if you look at the S&P 500, All right, so when was this? This was the 21st. All right, let's look at SPY on the 21st. All right, SPY on the 21st, we're down. And so if you had some put debit spreads, you'd still be in the profit right now, even after Friday's rally. You'd still be in the profit, slightly in your put spreads. Whereas with UVXY, I think you're still at a profit, but probably not as much. No, actually, yeah, you are still at a profit, but still not as much. Again, maximum, you're probably up like 10% or so. All right. So again, I think put spreads or puts are just way more efficient of a hedge than using UVXY. So I thought I'd just clear that up, just because I got some messages over Christmas. I'm not trying to be bullish or anything like that. I'm just saying, if you're going to hedge the market, there's better ways of doing it. All right. Speaking of options positions, our position in FLNG is doing quite well. We're in the profit. We bought somewhere in the 3360s, 3370s right here. And so now it's just chopping around, but it's a little bit higher. One of the things I also wanted to share with you guys today regarding tankers, or just maritime shipping companies in general, is some of the rates. We're actually starting to see some of the more some of the freight rates increase. One of the increases that I saw actually over the weekend was the liquid chemicals freight rates. So the liquid chemicals freight rates is actually slated to still keep going up, just because of all the major reroutes that they had to do because of the conflict in Russia. There's a lot of different chemicals, not just oils and distillates, but also too with food item chemicals, like palm oils and things like that. And so those, because there's a lot of heavy competition amongst those suppliers of, let's say palm oil, and not just in those distillates, energy and crude products. It's causing a premium on those rates. And so I just was looking at some, right now I don't know how to play this. There are some companies right now, like ASC, I believe, is one of the companies I just looked at over the weekend. They do a lot of distillates and chemicals shipping. So this may be a play. The options market on ASC, though, is just not very good. I mean, it only gives you up to July expiration. There is no 2024 or 2025 expiration yet. So I don't know about getting into an option that's thinly traded only for 206 days. That just doesn't seem like a very smart thing. But I may even go with common shares on this, although I do want a better entry. So I think I'm going to put this on my radar. I haven't really formulated a exact plan yet of how I would enter this. I do want to look for some other options that have, better optionality, some other types of chemical shippers. We'll see. There's just not that many names that I could find. So if you guys know of any names of shipping companies that are more into the distillates shipping, let me know. I know we do have some tanker names, some oil tanker names that we're looking at, like STNG and whatnot. But this is a little bit of a different market, the chemicals freight rate. It's a more specialized market. So if you guys know of any specialized shippers in this area that have decent liquidity and a decent options market, I'm willing to listen and hear your pitches on this. But right now, that's the only one that I could find that's listed on the New York Stock Exchange. There's some over-the-counter ones, but I don't usually participate in over-the-counter stocks. That's just not my cup of tea. So I guess we'll see. Baltic Dry went down last week. I think it's doing just a little bit of a retracement of the previous week's rally. So as you can see here, this is the Baltic. So we saw it go up initially, and then it just dropped at the end of the week, which is, I mean, this is a holiday week, so last week was a holiday week. This week is a holiday week as well too. So I wouldn't be surprised if we see some stranger price action happening, especially on something like BDI where it's not even traded. The Baltic Dry Index is not traded, so it's just the index of different price quotes for different routes. I do think that some of the dry bulk carriers are going to see some upside potentially in the weeks ahead. I'm just keeping a close eye on it. We were in MATX for a little bit, or Matson. And, I FOMO'd kind of into this. I should have held it, actually. We would be up like 20-30% on those calls I was in. But, I mean, shoulda, woulda, coulda. I think I got out at a 5% haircut or something and got into the FLNG name instead. So, I mean, it's not that bad. I think I only had 1 or 2 contracts on this. But other names that, we may want to look at if we see continued strength in BDI is, Zim Integrated, which is an Israeli shipping company, although it doesn't look very good right now. There's other ones too, like Navios as well. We'll see. Okay, I don't know about getting into the dry bulk containers right now. I do want to see BDI make a higher high, at least on a weekly chart, before getting into some of these Baltic or getting into some of these dry container names. But Zim definitely on my radar. Also Starbulk. Starbulk carriers is also on my radar too. I think I went over this last week as well too, but just in case, I wanted to go over this. This one, Starbulk, I believe is the one with the best options market on it. I think it even has weeklies. Yeah, it's even got weeklies, which is great. I mean, for someone like me that loves to sell premium, this is a great one. If it gets to, if we see a higher high on the Baltic Dry Index and this comes down into the 18s or so, that would be a pretty high conviction buy. So I might go with Starbulk over some of the other names that I just mentioned as far as dry bulk carriers are concerned. So I'm looking into this as well. All right, Starbulk. We're also here, over the weekend, we also got news that China is doing away with some of their policies that they enacted during zero COVID. And this is something that we've been anticipating. A lot of people were surprised on this and said, "Oh my God, did you see the news coming out of China? They're getting rid of the zero COVID policy." I mean, we saw this, right? Australian dollar bottomed out before. If you go back through my Twitter page, I put the Australian dollar against the Hang Seng, and we already saw that the Australian dollar bottomed before the Hang Seng did. Actually, you know what? We can talk about it, or we can actually chart it out. Let me just chart it out for you guys again. Let's see here. AUDUSD. All right, there you go. Okay, so we saw this on the daily chart. All right, and this is something that I have on my Twitter page as well too. See, we saw the Australian dollar bottom out on October 14th or so, about 2 weeks ahead of the Hang Seng. And so I said, hey, this is probably a sign that they're going to reopen. Already there were rumors about that happening here, some from some of the local governments. And I said, hey, if this is going up, it means those rumors are true. Remember, we've been using the Australian dollar as a lie detector for China, and it's been a pretty good lie detector. Okay, and so we saw it bottom out. We saw a higher low on the daily chart. Was it also on the weekly chart we saw that? No, and the weekly chart, it just went just straight up. But on the daily chart, it made a higher low, and that was a good point to get in. Unfortunately, though, none of the stocks that I was following came to our levels. Some of the ones that we're talking about here. ZTO is one of the names that we're trying to get into. I really was trying to get in under here. But it never happened. It just never happened. We had earnings, and I thought, oh, maybe after earnings it might come back down just a little bit. It went down for one day, and it just went off to the races, and it just never really looked back. So that's unfortunate, but it is what it is. Risk management is very important. And right now, with the environment that we're in, I really wanted a bigger pullback to get maximum value out of that trade. I just want to make sure that if we get into that trade, that we're not, dealing with any large drawdowns or anything like that. So I was really trying to be patient, but sometimes, exercising that patience means we lose out on a trade. But if this comes back down, if we see a pullback in China, that would be such a gift. But I just don't know if we're going to see that. Again, the Australian dollar is pretty strong today. It's over our make or break level. And if it holds that, and again, if this comes down, it needs to hold that 640 level, that 0.640. It may not even get down there. It may just chop around here, form a box right here, and then just bust out of it. And again, that would be still very bullish on China, on the China trade. Hopefully we get a decent pullback, enough to get into ZTO. Again, I've went over the ZTO thesis so many times with you guys. Look at the last 3 or 4 weeks. Look at the videos on YouTube. There's countless times where I mentioned ZTO. They're buying back their shares, EPS growth, free cash flow growth, raising their dividend. All the good stuff. It's the FedEx of China. It's an industrial name. Very low multiples. Again, very nice, very good name to be in. With the reflation trade coming back into China, basically China is going to have a reflation trade. I think very similar trade to our spring summer of 2020 and the S&P 500. I think they're about to have that kind of environment where all of these cyclical stocks are going to just go way up, and so I want to be involved in that. I may be even too late, because that expectation is already baked in now. So let's see what happens. If it can retrace down to these levels, I'd love to get a shot at ZTO. And again, Australian dollar has been a great leading indicator. Since we're looking at the Australian dollar, we might as well also look at the dollar itself, the US dollar. Let's see. Let's actually open it up on TradingView. I want to take a look at the DX futures. So right now, this is what the dollar futures looks like. We are a little bit down. We're just chopping in this area. We've been in this area now for a couple of weeks. We are positioned. Well, I am positioned for a dollar rally. I am using it as a hedge right now. My UUP position is a hedge on some of the Quad U and some of the other shares of stock that we're in right now. We're a little bit underwater on this, but again, my position sizing is such that it's just a small hedge on my overall Quad U shares. Quad U being a metal miner, it's a uranium miner, so it's very sensitive to the dollar. Most material miners are. So right now, the dollar is down a bit. If we look at some of the other risk-on currencies, and the currencies that I told you guys from months ago, weeks ago, even last week, I said, a forward-looking indicator for risk-on, risk-off would be the euro, the Japanese yen, and the British pound. And right now, the British pound is down a little bit, but the euro is up, and also the Japanese yen is down a bit. So we're seeing a little bit of a mixed signal from all of these, the main risk-on currencies. If we look at some of the emerging market currencies have made a huge recovery. This is a emerging market currency fund. Of course, it's not like, it's not really granular. You can't see like which areas are outperforming. Is it Asia? Is it Middle East? It's all kind of mixed in. But overall, the emerging market currencies have recovered a bit towards the end of this year. So there is a little bit of a risk on. We'll see if this is the high. If this pulls down, and again we're at a level where I think we might see some profit taking in emerging market currencies, that could put some tailwind on the dollar, perhaps for January before the before the February FOMC, or before maybe some of the CPI or other data dumps that we're going to have in the middle of January. So we'll see what happens. But I do still have that UUP position. It's for January 2024, so we've got time. We'll see what happens with that. I am monitoring the dollar and the Australian dollar also for our next position that I want to play, which is metal miners. Right now, gold, because the dollar is down a little bit today, gold is up. Wow, a hefty 1.3% today. That's pretty good. 1.78% on silver. I'm pretty bullish on silver. I really want to get into some of these minor names. One of the minor names that I'm trying to get into, or the ETF that I'm trying to get to, is the junior silver miners. If the dollar can retrace some of this down, and I'm not saying that the dollar is going to come back to these highs again or make new highs, in the upcoming months. I just don't think so. Maybe towards the end of 2023, if inflation comes back, we may see the dollar come back to these levels. But I just think we see a retrace. All right. And if the dollar gets to this 107, 109 zone, that's going to put some pressure on precious metals. And while precious metals are being pressured, if junior miners can come back down to these levels under $10, I would be such a buyer. And here it did, I think 2 weeks ago, it almost went under. My alert was right at $10, and it was at 10.01. Literally I couldn't make this up, by 1 cent. It missed one of my alerts. So it is what it is. I mean, even if I did get the alert, would I have acted on it? I don't know. I don't know if I would have. I really was set on trying to get it in the 980s and 990s. That would have been a very good zone to buy some calls. If I had just bought calls on the 19th at that day, oof, I mean, we would be so up right now. SILJ is a pretty good options market. It's got a pretty good options market. So, I mean, we'll see. We'll see. If we can get a pullback, that would be great. I'd love to see a pullback on this, and try to get into some leaps. And then this one also has weekly options chain on there. So I'd be selling weekly poor man's covered calls on this, generate some income, and also bring down my cost basis on those long options. All right, so that's still in play. We shall see what happens. I really want the dollar to go up. I can cash out of those UUP calls and then get some of these SILJ calls with that. That would be like a complete wash, just using the gains to buy calls on SILJ. I mean, yes, please. I mean, that would be such a gift if the market gave that to us. But we'll see. Okay, so that's my plan for the miners. So I just went over everything. Oh, look at that. Just in the time that we were talking, Quad U just went up. Hooray, hooray. Look at that. It looks like it's about to break out. On the daily chart, looks like it. If it can break out and get into the mid 7s or high 7s, I'd love to sell some covered calls, generate some income on my shares. All right. That would be very nice. Cryptos. I know a lot of people are asking about cryptos. It's still the open interest on Ethereum still around 4.9 billion. I'm not seeing all those speculators coming in. We do have this supposed March catalyst where people can withdraw staked ETH. I don't know when the speculators are going to come in or when the options traders are coming in for that, but they haven't come in yet. So we won't speculate on when that happens. If it happens, we'll see it happening and we'll act accordingly. But my plans still haven't changed. Day to day, guys, my plans really don't change. I stick to my levels. I stick to my thesis. because I know my thesis, I know my process, I know when I have an edge. So that's pretty important when you are trading or investing, is that you stick to your disciplined plan and not change it for just every little thing. I mean, of course, if the fundamentals change, if you are proven wrong, of course, staying wrong is like the worst thing you can do. But changing your plan just because of just because a day passes or a week passes, I don't think that's a very smart thing to do. You want to only change it when the data changes, okay? And so staying disciplined and really acting on that data is really important for a long-term trading and investing career. Those who don't act with discipline generally have very short careers in this business. It's just the way it is. But anyway, day to day, nothing has changed. ETH is still, just chopping around on this kind of, I guess what you want to call a value line or something. But this is the line that we originally used to get long around this $1241.46, $1,241.46 per coin. This is the area that we just got long in the summertime. We got stopped out for break even on this. And it's kind of just chopping around that level right now. I think it's the Ethereum and Bitcoin are trying to just either form a box and either reverse this trend, or it may just consolidate and continue. Who knows? I don't know. You don't know. Nobody knows. So until we see a clear direction, I don't think there is a clear trade. However, I do think the reward to risk becomes stacked in your favor for a long position if ETH to gold ratio goes down to 0.59. That's where I'll be willing to go on a long position on ETH. But until then, I'm just staying out and just observing. All right. So my plans for Ethereum and Bitcoin really haven't changed. Anything else you guys want to look at? Somebody from chat mentioned copper. Yes, copper. Actually, I mentioned that in our Discord today. Thank you for reminding me. I almost forgot about copper. Yes, we're actually seeing copper make an interesting move here. Copper is actually going up. Copper is also one of those things that is a forward indicator for China, okay? It used to be that people used to use copper as a forward indicator for the global market. I think that is a bit obsolete, that view. But for China, I think it still applies. So I'm not really surprised here that copper is going up like this, especially with all this, I guess now mainstream media news coming out with the end of those restrictions on foreign travelers in China. And that actually is kind of significant, because in China, their financial reporting requirements are way more lax than here in the United States. And so a lot of the institutional big money, when they invest overseas in China, and as part of their due diligence, they actually send people there to take a look at what's going on, to take a look at the operations as part of their due diligence. So now that there's no need to have this way long quarantine process as a visitor to China, I think that would increase the availability of some of this large capital to go into China again. So that may be the reason why. I mean, of course, when we looked at the Australian dollar, it looked like as if this was already going to be the reality. I mean, the Australian dollar kind of front ran this, but I think maybe perhaps commercial entities in the copper space, maybe they were holding out to get that confirmation from China about travelers. So it could be that. I'm not really sure. I'm not really sure what the story is behind it, and I don't really think the story is that relevant. I think what's more relevant is, though, if copper breaks out of this and ends the week above, let's say, what is this? 395, okay? $3.95. Let's say it closes over that. I think that's pretty bullish on copper, and we could see copper maybe enter an uptrend. which in that case, stocks like, FCX, Freeport McMoran, these might break out. So I'll have to do some homework and see what miners are out there that do a lot of, or that have a lot of copper exposure. I know Barrick Gold has some exposure to copper as well too. Oh, look at that. That's a beautiful uptrend right there. I mean, that could just really go up. We may be too late on this. I don't know. So I'll have to do some research and digging. But copper on my radar right now, just because of this big move here, and it looks like it might break out. But yeah, thank you for reminding me about this, whoever you are. This could be very interesting. Okay, pretty interesting. Actually, since we're looking at copper, I know we've been looking at some copper gold ratios as forward indicators for where we think the 10-year was going to be. How does this change copper gold? It's going up. Okay. It's still way down. I mean, it's still way below what the 10-year is. Usually, we talked about this before, guys. This as a forward indicator for the 10-year Treasury rate. 10-year. 10-year. Where's the 10-year? Micro 10-year, no. I just want the 10-year yield. I forgot what the thing was. Okay, we can use TNX then. TNX. Usually we see TNX and this is very correlated. Generally, this copper to gold ratio will front run. Ever since, I think it was ever since 2005 or 2006. This the copper to gold ratio times 1,000 would front run sometimes a few weeks, sometimes even a few months. It would front run the 10-year Treasury rate, okay? And right now, the 10-year Treasury rate is around 3.8%, but our copper to gold ratio is at 2.13, and generally, these two will meet at some point, although it can take some time. For example, here, we saw the 10-year, we saw the copper gold ratio go up into the upper twos and over 2.5, and it took TNX, the 10-year Treasury Bond Yield. It took them like an extra months, almost a year to catch up to that. So this could be sometimes this is a way more forward-looking indicator than what most people are used to. Most people are used to like something happening like 3 days or 5 days ahead of time. This can happen months ahead of time. So it's still implying that we should have lower 10-year Treasury yields. I guess we'll see. We'll see what happens. Okay. I do think though, perhaps for the first half of 2023, we might see rates coming down. But we'll see as we get more of these data dumps in January, and market starts pricing in when the supposed rate cut happens for the Fed funds rate. We'll have more clarity, and I think one of these will have a big move in 2023. All right. Anything else you guys want to look at? Anything else? Going once. Going twice. All right. Well, it looks like that's it for today. Well, that wraps up our session of the Morning Market Memo. Our Discord invitation link is in the description below. Come join our Discord. Be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment. Show us some love, baby. All right. I'll be back tomorrow and Thursday, 10 a.m., 30 minutes after the opening bell of the New York Stock Exchange. We'll go through some of our thesis. We'll go through our liquidity data. We'll go through some end of the year stuff as well too. If you guys have any topics you guys want to cover for this week, let me know. Shoot me a DM. Come to our Discord. Write me. Whatever. Let me know, and I'll try to incorporate that in the next 2 days. Have a great day, guys. Trade safe, and I'll see you guys tomorrow.